Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Okay, welcome everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and thanks very much for tuning in each and every week to the show. A lot of things going on in the world of mortgage lending right now as the Fed and the federal government and the Treasury and the market itself, as well as the consumers, are all really taking advantage of these rates. The rates are low. They're artificially low, but they are low. So if you're out there and you're thinking about it, don't think much longer. There are some housing statistics coming out which indicate that we may be in for a bit of a rocky road at the end of this year through May of 2021 in terms of prices, where they're going, and the overall effect that the unemployment is finally going to wreak havoc on us as Congress is now readying, I guess, the third phase of this coronavirus relief package that they've been coming up with, and we're not quite sure what route it's going to take, but it's certainly going to put money back into the pockets of people who need it. There was some information that came out about a lot of companies that got into PPP, the Paycheck Protection Plan, who maybe shouldn't have, and I guess there's still $150 billion which has not been claimed or actually applied for. There's a little confusion as to how those loans are going to get paid back, if they're going to be paid back. So all of these things going on right now for the consumer. You want a house, you're looking for a house right now, you're trying to find a way to buy a house, and whether you're going to get in there and see the house in person, whether you're going to do one of these virtual tour things, whether you're going to see it only during inspection once you have an accepted offer. All of these are possibilities within the scope of buying real estate. Main thing here, of course, is can you get a loan? If you're one of the many people who are still working, although there are still not still, but there are about 30 to 40 million people who are not working. We talked about it a bit on the LinkedIn show and the Facebook show. We do about 2 to 3 minutes every day on those particular social media outlets to talk about, the immediacy and what's happening in that day and what's going on. What is happening is the Paycheck Protection Program, which is supposed to keep people employed, the 30 to 40 million people that are unemployed, and what is going to happen. That's why they're talking about the continued expansion of the relief package that they have. So if you are these people that are trying to get a loan, you have to prove that you're working, right? I mean, that's the main thing. And they check when the application comes in, and they check 2 weeks later, and they check 5 minutes before you're about ready to fund that deal to make sure that they don't get stuck with that loan. Main thing for all these lenders is, can I take what I just gave you as a loan, turn around and sell it to Fannie Mae or Freddie Mac or some other investor? There are some people coming on the show today who are going to talk about non-QM. That's the loan that is available to people who don't necessarily fit within that box. And you're out there listening and going, hey, that might be me. Well, Tomas Trujillo is going to come on from LoanStream. He's been on many times. But LoanStream has just come out with some non-QM stuff, bank statement programs, maybe some asset depletion. But he's going to talk a little bit about that and about, and another thing, a little bit. Have you ever heard anybody say a lot of bit? No. Why? Well, why is that? Why is a little bit? It just flows out of my mouth. I hate saying it. And every time I do, I go, why am I saying that? Daryl?
I completely agree. There are nonsensical terms. George Carlin was a word master with stuff like that, right?
Loved him. I saw a movie the other night with Carlin in it. He played the dad to, who was the kid? It wasn't Adam Sandler, but it was somebody like that. It was a very odd coupling of a pair of big stars. The movie was okay, but it was just, you remember Carlin for how he took a word or a group of words and pointed out the ridiculousness of however they're interpreted, which I guess leads me into the next thing about the political correctness, about how we're supposed to behave, about what's right to say, what isn't right to say. And I think you and I, our generation, is blamed for a lot of that. The hippies of the 60s, really educated a lot of people as to, what is appropriate speech, whether it's a feminist angle, whether it's a racial angle, whether it's, whatever it is. But in 68, we all know 64 to 68 is the housing bill, equality in housing. All of these terms that are considered protected classes grew out of this need to identify what is correct when we speak about people, whether it's in lending or whether it's in fair housing. I don't know. Your thoughts on that, Daryl?
Well, I mean, there was a lot of stuff that came down during that period of time, and all the change at that point, if it was executed, was considered to be good change because there was a lot of people that had to approve it and say go before something actually happened. And
Right.
both sides there was a mind melt. There was a meeting of the minds. Today, things get implemented and turned into law and turned into things that sometimes you didn't even know it happened, and it's already there, and they didn't ask. I think we live in it's easier to beg forgiveness than ask for approval society at this point.
You're right about that, because I know that when I first moved here, Cher had a house she was building down the Coast Highway, right? That's my star introduction to everybody listening. Yes, I live in Starville, Malibu, California. So Cher was building this house, right? And she built this kind of castle-like structure overlooking the Pacific Ocean. Now, in Malibu, in LA County at the time, the wall height, and everybody knows this who builds a house, is 6 foot. You can't build a wall, a fence, a hedge higher than 6 feet. Well, she had some that were 15 feet high. It was literally a castle. I think they had a moat around it. It was one of these bizarre things. So what happened? The city granted her permission. Like you say, it's better to ask for forgiveness than get permission. And that's just, a typical way that things happen, not only to privileged people, and some would say the white people are privileged, and I have to agree with a lot of that, especially when we're talking about housing, when we're talking about lending, when we're talking about how applicants are viewed. So a couple of stories on that. Now, just get to it as soon as we get to the midway point. Just give me a heads up, please, Daryl. Okay.
We get about 3 minutes.
Okay, fine. I'll make this quicker. A year ago, little less than a year ago, I had a client, not my personal client, but somebody who works for Malibu Funding. Had a client who had an appraisal done on their property. This was before COVID. Appraisers would come in, and the appraiser came in and had several interactions with the people that he was appraising their home. During the entire interaction between the appraiser and the people in the home, there were some indications that the appraiser had personal opinions about the people rather than the home. When you do an appraisal, you go in, you do your appraisal, and you get out. You don't make comments to people. You don't make lewd, lascivious, derogatory, complimentary, pleasant. No, you're there to do a job, because you just don't know who the people are, and they're afraid because they don't know who you are. So when this interaction took place, the clients were upset. They thought it was an inappropriate, unprofessional way that a person would direct comments to them during this appraisal. They made a complaint. The appraisal came in. It was $50,000 less than comparable properties in the neighborhood. The clients, our clients, were livid. We're just beside themselves. And this was a racial issue. This had to do with people of one particular group not particularly caring for people of another particular group, having nothing to do with the facts and figures of the sales that happened in the neighborhood. And that's how you have to look at it when you're in housing, when you're in lending. You look at the facts. You don't look at the people. Well, that's not how it runs in a lot of different industries, as we've seen, whether it's with the law enforcement or whether it's with other aspects. I mean, you see the videos all the time. I don't have to tell you about it. In this particular case, what we had to do is write to the appraisal management of the appraisal company. We had to direct our comments, as well as the specific nature of the complaints and what happened in the transaction between two parties, inappropriate, unprofessional, and bordering on racial innuendos. We laid this out in a very comprehensive way and went to the appraisal company and said, this is not right. We want a report, and we want a copy of the report so that the clients can have the ability to be able to get an attorney and seek damages. That's exactly how we said it. I wrote the email myself. Next day, appraisal came in $50,000 higher. Just happens to be. So when we're talking about equality, the racial makeup, anything having to do with housing and lending, this still occurs. And whether it has happened to you, this is a story that is fresh from the front lines of real estate and lending. And this is what we did about it. And I think most lenders out there would do the same, especially in Southern California, when we've seen probably 50% of our business be in minority lending of any persuasion, really. I mean, and we've seen a population shift here in Southern California, as we've seen nationally. And I think naturally, a lot of this stuff is going to go away within the next, however decade or so. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for listening. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. Thanks for tuning in. We are on YouTube. If you go to YouTube, Jeff Barton, the Mortgage Voice, as well as the 8 major podcasts, among them Google and iTunes and iHeartRadio and Spreaker and a bunch of others, as well as 5 radio stations in 3 states. We are broadcasting on Saturday and Sunday. If you're driving around and you're thinking of getting a house, buying a house, looking at properties, now's a great time. There are a couple of headwinds that we're going to come into over the next 12 months. Let's talk about them a little bit now. So there's a thing called the Housing Price Index, and there's a couple of people who put one out. CoreLogic does. They're a company that values properties, as well as the Consumer Price Index. People put one out too. This is the projection of where housing prices are going to be in the near future, in up to a year. They have said, and this may or may not be something that is hugely problematic, because as we all know, this particular recession, it has nothing to do with housing, it has nothing to do with the loans, it has nothing to do with anything. This is a pandemic-driven recession. 40 million people, thereabouts, out of work, give or take. That's what's caused this. So the underlying strength of the American, mortgage and home is still pretty strong. So the consumer, not the Consumer Price Index, but the Housing Price Index, HPI they call it. You can look it up online if you don't know anything about it. In most of the major cities in the U.S. last month, we saw a slight decline in pricing. Overall, nationally, the prices went down about 1.3% month over month. What does that mean? Okay, projected out for a year, they're saying that prices in May of 2021 will be down by about 6.6%. Now, that's not a huge drop, right? That's not a 30%, 40% drop, which is what we saw in 2008, based on the problems in that recession, which were, of course, bad loans, bad lending, bad appraisals, bad when they value stocks and bonds, the rating agencies, bad those people too. I'm sorry, I can't speak. It's just I'm trying to get my arms around how you as a consumer, you're out there, you're driving around saying, oh my gosh, the prices are going down. Well, when you consider on $1 million property, it's going to be worth $950,000 if it drops 5%. In a year, Yeah, that's concerning. It sure is. But on a priced property of 350,000, obviously it's not going down that much, going around about $12,000. Still not great, but at the same time, there is opportunity for somebody who is looking to buy at a lesser price. Does this mean that the floor is going to fall out of the housing market? Well, we think in 2021, especially in May, we will be well into vaccine land. That's what we're looking for and looking towards, so that people will be 100% confident that if they take the vaccine or they want to go out into public, they don't have to worry about it anymore. What has kept properties and the prices of those properties where they are now is what we've talked about a lot on the daily shows as well as the weekly radio show. And what has kept us there, sorry, that wasn't an earthquake. I hit the camera. Sorry, that was just me hitting the camera. Anybody who's watching this thing, is the way that properties are on the market currently. Now, I have, as a real estate agent, I have a couple of properties on the market. We are pricing them at prices as if we were seeing an increase, which we were up until last month, June, of 3 to 5% a year. So the properties that I'm pricing are priced such. And because of that fact, we hope to see, obviously, a consumer in a market which has fewer and fewer houses on it because of COVID, that the demand for the housing remains strong, especially in a town like where I live, and that the prices, as a result of fewer properties and heavy demand, continue to see pretty good gains. However, we do know, because these people over at CoreLogic, they're not stupid, and they've seen these trends for the last, I think they've been tracking it for the last 40 years. They've seen the trends when things like this happen, when we have unemployment at a certain number, when we have demand or the overall economy falter and drop by a certain number. Yeah, we're going to see falling real estate prices, but not as much as you might see in normal recession, which means that housing may be the one element that we can rely upon. So if you're out there right now and you're looking for property and you're thinking, okay, maybe I should wait, there's a trade-off in waiting. And I'll tell you what it is. When housing prices drop, and they will drop, let's say they drop 5% to 6% through next May, and you're in January and February of next year, and you're looking for houses, are you guaranteed that the number of the rate that you're going to have to pay in your mortgage is going to be what it is today? Historic lows. Now, we talk about this as if every week is a balloon that popped. This is why? Because 2.5% on an FHA loan is unbelievable. Under 4% for a jumbo loan is unbelievable. But that has offset the rise in real estate prices and the lack of inventory. So in a year, let's say the prices of property drops 5 to 6%. It's not a lot, but it's significant. Are you going to say that the money that's available is still going to be at 2.5%, 3%, 3.5%, 4%? If, in fact, the property that you're looking for is available at a less price, say 5, 6% less, 10% less even, but the rate goes up by a point, what is the difference in the amount of money you would have saved or spent if you buy today versus then? That's an interesting calculation to make, and one you should be making with your real estate agent, one you should be making with your mortgage broker. Because if it comes down to a wash of $10,000, then you probably should make the move at ASAP rather than waiting for falling prices. Because if, in fact, the mortgage rate goes up, which it will go up eventually, as will prices go up eventually in the real estate market, even though we're predicting, I'm not predicting it, the people at CoreLogic are predicting it, that the prices itself in real estate are going to rise by 6.6%. The very interesting calculation, and again, seek a professional, somebody to help you guide your way through it. Or if you are a professional, somebody who's in the market, who buys and sells all the time, you will recognize opportunity when it comes up, when that number of rate and the number of real estate price equals, I can make money on this, or this is a good deal. Those are things that you really have to have confidence in. And looking at the market and seeing what goes on in the market are really key factors in making those kind of decisions. That decline, by the way, will be the first time we've had a decline in 9 years. Think about that. We've had 9 years of rising real estate prices. It's really unbelievable. We've had such a run of it that, let's talk about rates. I talked a little bit about rates before. 30-year fixed rate mortgage under 3%. You could probably get a 15-year mortgage at 2.5 to 2.6%. Unheard of again. I've always loved the 15-year. You should love it too, especially if you're trying to refi out of something in the 4s and you get down into the 2.5 range. You should think about the 15-year rather than 30-year, because the payment's going to be pretty similar. You're going to drop that rate by 1.5, and a 1.5 on $100,000 is going to be $1,500 a month. So not $150 a month. So multiply that times a $500,000 loan. That's like $750, $800 a month less in payments with 15 years less on that loan. That's why I always say it. The 15 years is a great product if you can afford it. But if you're coming from a higher price rate, and I can't believe I'm saying this, but a 4% rate of a year and a half ago is a higher price rate, down to 2.5%. Yeah. So where are we going to go with that? I have no idea, and I don't know if we can go much lower. But look to the bond market, look to the mortgage-backed securities and what they're selling for, and obviously a flight from stocks into bonds would raise the price but lower the yield, and that's the key here, right? That's what we're looking for. What is the yield, and whether people who are afraid of one particular risk category in their portfolio moves it to another one, whether it be treasuries, whether it be equities, or whether it moves back into stocks. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening. We're on 8 major podcasts. We're on YouTube, Jeff Barton, the Mortgage Voice, as well as 5 different radio stations in 3 different states, from Las Vegas down to
breaking up a little bit. Jeff, you're breaking up a little bit. You probably need to. Can you tilt the computer
is that
back?
Better?
Yeah, it is.
Is that
Okay.
better?
Let's try again. I apologize.
No biggie. Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and thanks very much for tuning in to our daily talk shows, which are on LinkedIn and Facebook. We try to bring updated information on those 4 to 5 minute shows on a daily. And here for the weekly show on radio, 5 stations in 3 different states, from Albuquerque, New Mexico, all the way up to Las Vegas, Nevada, the Inland Empire in Southern California, as well as Lake Tahoe up in mid-California. Welcome and thank you for listening. We're on 8 different podcasts, all the major podcasts, from Google to Apple to iHeartRadio to Spreaker, and many, many others. And thanks very much. I wanted to get right to our next guest, who's going to provide some solutions for you out there who really are looking for somebody to help in a situation where we've lost a bunch of products in the marketplace. They're coming back, and they're coming back strong with LoanStream. Tomas Trujillo is with us. Tomas, how are you?
Hey, Jeff, I'm doing good. How are you today?
I'm okay. Thank you very much. And thanks for coming on. I really appreciate it. I wanted to get to you right away because I saw an email that came out from your office about some of the offerings that you're having, which are welcomed back into the marketplace. Can you describe what you're doing and type of borrowers you're looking for?
Well, after everything exploded and everybody had to stay home, we lost a lot of product out there. Luckily, we're starting to get some product back. It's not as aggressive as it was,
right,
but it's something that we're starting to get back. We have the DSCR loans back, which means that you don't need to qualify based on your income. Rather, you would qualify based on the rental of the property you're buying's income.
Right. Right. So explain that out for people. I know a lot of people loved that product when it was out. Explain the parameters, maybe some of the debt to income or some of the equity you need in the property.
Well, absolutely. This is more for an investor. This is for somebody who wants to buy something. You got to have at least 6 months of ownership somewhere. So if you had just bought your first home and 7 months have passed by and you say, hey, you know what? I found a really good deal. I want to buy this place as a rental. but I don't have the income. I'm not qualifying because I write everything off. Well, I got a solution for you. We can take that property that you want to buy, make sure that the rent that you're going to rent it for is 1.5% above the PITI payment. So if you're going to rent the place for $3,500 and the mortgage is going to be $2,500, you can go into this loan with nothing else. I'm not going to ask you for bank statements. I'm not going to ask you for your W-2s, your taxes. I'm not going to ask you for anything. The property will qualify on its own. And with a 640 FICO, which isn't too bad.
640 FICO is smoking. I mean, when COVID first hit, all the lenders upped their FICO scores to 680 and above. If you're saying that somebody can get out there, get a rental property, all they have to do is show positive cash return, whatever the number is for that. You said 1.5%. Would that be of the purchase price or 1.5% of the mortgage payment?
The mortgage payment.
So really, it's almost, if you have positive cash flow on a building, and you've owned your own place for 7 months, 6 to 7 months, you can go out there and get a place with a 640 FICO. That's a great deal right now.
With a 640 FICO, up to $1 million at 75 LTV, which isn't bad. Now, if you have better credit, if you're at maybe a 720 plus, you can go up to 80% LTV, up to $1 million, which isn't too bad.
That's great. You know, the average FICO score out there for my company is it's over 700. So most of the people that work with my company, Malibu Funding, can afford this and can get the higher LTV. How is it? When did you roll this out, and how's it doing?
We just rolled it out this week. It just came back out.
Okay.
We're working out the new bugs because now we had a big investor who puts the money out there for pretty much all the companies buy into us. So they own a little piece of us. So we're going to get a little bit better pricing. We'll get a little bit better service than we can competition for a while.
Tell me, in the new company, do you have a double underwriting system? How's your underwriting going?
No, same as always been. I mean, file comes in, we underwrite ourselves. We do everything ourselves. Everything's in-house. Well, I don't know if it's in-house rather than everybody's working out of their own homes these days, but
right.
We don't send it out anywhere.
Well, that's good news. Obviously, a lot of banks and a lot of lenders, mortgage bankers, are really busy right now, and that's a concern, right? I mean, priority in line, where do you stand in terms of the underwriting process? These are all very important, especially if you're on contract and you want to buy, in a program like this. How is it at your company? Do you have different underwriters for different products, or is it all in the same pool? How are you working it?
No, we have different underwriters for different products. We want to make sure that whoever's looking at the file is the person qualified to look at the file. We don't want them thinking about, the new Fannie guidelines, the new FHA guideline is this. We don't want them to know about any of that. We want them to concentrate on what we're looking at. We want them to see, okay, a DSCR loan. Now I know I got to have at least a 640 FICO. I don't care about DTI, what's my rent. We want them to know what our file is going to look like. So we're specialized to the loans that they're looking at.
I see. Excellent. Okay. Do you have any other offerings that you might want to share with us?
Well, I mean, we had the bank statement loans back. We never really got rid of those, but they're still up in the air. We're still working on them. We're still trying to crank out some bugs in the system. We're still trying to work out the pricing. The pricing our price is not really working as well as it should be right now, so we're still trying to work that out.
I see. So, and in many of the other programs are very standard, conventional, FHA, those type of products that you have?
Sure, and we offer all that, the FHA, the VAs. I mean, I'd tell you if you're going to do that, I mean, maybe I'm not the best place for that because there's so many other choices and so many bigger choices. But I think my niche would be more with we can do the loan that no one else can do, that everyone else is having a problem with. That, I think, is where we find our niche. So we're talking about bringing back I-10 loans. We're talking about bringing back all those old loans that we used to do.
I see. Yeah, and that's important. Obviously, with a new investor into your company, a little bit more strength, you're able to spread your wings, maybe bring in some products, bring back some products. Certainly the market can use it. Where do you think the market is heading? I've been predicting based on some of the indices that I look at that we may see a bit of a fall in real estate prices next year. And I don't know if that's good or bad for the market overall.
I don't know. There's been all kind of speculation. Speculation was the fourth quarter this year. It'll be the fourth quarter and the first quarter are going to be amazing. That the rates are going to drop to almost nothing.
Right.
Yeah, maybe 1.5. I mean, it's all over.
Wow.
We're not really sure what's going to happen.
Wow, that's interesting. That's the first time I've heard that, but I appreciate you saying that because in going through some of the, I guess, things that would go through a buyer or a seller's mind, right? I mean, you always want to sell high or buy low. You always want to get the lowest rate on any product. And so how do you weigh the differences in decision making that you have to have if today we have absolutely low low interest rates, but you have high real estate prices? And maybe in a year, you might have low real estate prices, but much higher interest rates. So when you buy and when you're going to buy, finding out more information, like you just said, is essential because everybody has to make these decisions, and nobody knows.
Yeah, nobody knows. But what I do think is positive is that whatever happens, whoever's going to buy is going to be in a great position to buy something, because if rates go up and prices go down, well, you've got a great deal because you know the rates are going to come back down anyway. And
right.
In our political climate, we're thinking that
right.
Our administration wants to make everything look as good as possible coming into an election year. Well, I don't think rates are going to go sky high. I think everything's going to pretty much get better, maybe a little lower. I don't see prices jumping through the roof, not right now, but I mean, we'll see.
Hey, Tomas, could you shout out your phone number for people who would like to get in touch with you about that terrific loan that you were talking about?
Absolutely. My number is 323-228-5181. Tomas.
Thanks very much, Tomas. I really appreciate it.
Absolutely.
I'll talk to you soon. That's Tomas Trujillo from Loan Stream. I'm Jeff Barton for The Mortgage Voice, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and thanks very much for tuning in each and every week. As you know, we're on 5 different stations, 3 states, from Albuquerque up to Las Vegas, including the Inland Empire in Southern California, as well as up in Lake Tahoe. We are also on YouTube, Jeff Barton, the Mortgage Voice. And if you go to YouTube, hey, join, subscribe. When you do that, really helps me. I know this is a pitch for me. Sorry about that. But I do need the help. So if you're out there, thanks very much for listening. And we're on a number of different podcasts, the 8 major podcasts that are out there. But I want to get to our next guest. He's the first time on the show. And I don't know a ton about his company other than we have a mutual friend that knows both of us and does some marketing for us. Been on the show, Jamie Blue, before. Yeah. So welcome to the show, Jason Engelman. He's from Freaky Fast Home Buyers and Rentals. Jason, how are you?
I'm doing good, Jeff. Thank you for having me on the show.
And thank you very much for coming on the show. Okay, let's get to what your company does and where you're doing most of your business.
Sure. So Freaky Fast Home Buyers and Investments, we're a turnkey operation. We buy properties, we rehab them, fix them up, we rent them out, and then we sell these turnkey properties to passive investors all around the country, and then we manage the properties for them. So it makes life easy for people who don't want to be landlords. They don't want to deal with the headaches. They don't want to have, tenants calling them at 2 a.m. saying the pipes burst and there's water in their living room and bedroom now. Like, they don't want to deal with all those headaches. So they're looking for an opportunity to make double-digit returns passively. And so they can buy a property from us that we've already rehabbed, made pretty much new. We've already screened the tenants. We've already got the tenants in the property. They can buy these properties and then sit back and let us do all the hard work, all the grunt work, manage the properties for them, and just send them mailbox money every month. So our motto is write a check and receive checks freaky fast.
Now that's an interesting business model in that you're really taking the onus of any responsibility other than financial off the shoulders of the investor. And a lot of these investors who are looking to, hey, I want to be a landlord, I want to get passive income, they have no clue about how to rehab a house. They have no clue about how to manage the money in order to do that. And so I believe in a situation that you're talking about, you probably offer a pretty good solution for a lot of people.
Absolutely. You know, I've traveled the country speaking at these different real estate conventions and seminars. I remember last year speaking in California, and, you know, I asked the audience, the congregation, whatever, what are some problems that you guys are running into out here in California? And they all said, finding deals at a reasonable price, finding deals that they can make double-digit returns. I think most of them were finding, you know, investment opportunities where they make maximum 6%, and if we're lucky on that. They were having a hard time finding good construction crews to do their properties. They're having a hard time finding good property management crews. So those were all the problems that these investors out in California were finding and facing. And then so look what I'm experiencing, you guys. Let me show you what I know that you're experiencing. And I hit the slideshow, and all those problems popped up. And I said, I know exactly what you're facing. And that's why we've created this model, this business, is to eliminate all of that. So instead of, you know, so many investors, especially when they're new in the game, they lose a lot of money on their first couple purchases because they buy the property too high. Right. And they don't know who to hire to rehab the property, so they find, you know, some guy who can tell that they're green and takes advantage of them. And so before the property is even completed, they've lost money. And now, you know, they're in this boat of like, whoa, it looks really easy on HDTV, but it's
you know it does.
and of course, you know, that's not real life. So our model is to help people make money and to make it passively. So where they're not literally pouring 40 to 60 hours a week into these investments, they could literally just purchase these properties, let us do all the work, and collect double-digit returns. And for people who are listening to your show out in the Northwest, California, and Nevada, Washington, you know, we can provide opportunities for you to make double-digit returns.
Now, when you say double-digit returns, and I believe you, are you talking about on if they sell the property, or is this based on what number is the double-digit return? Based on the investment? What is it?
Yeah, so there's two ways to invest with us. You can either, or there's two ways to buy the property. You can either buy with cash, or you can buy by getting a loan and do a finance. So let's just start with cash. If you pay, let's say you call me up and you're like, okay, I have $75,000 worth of cash, $75,000 cash in the bank right now, ready to go. Then I can sell you a property that's already been rehabbed. It already has tenants in place. It's already cash flow. And so you could buy that property and every month start receiving checks. And after you take out all your expenses like taxes, insurance, maintenance, property management fees, you're left with a net profit. And that net profit equals double-digit returns. So you're making a minimum of 10% annually off of that investment.
So $7,500 in that example that you walk away with at the end of the year.
At the end of the year, correct.
That's a great deal. Hey, before we get any further, shout out your phone number for people, because I know there are people out there thinking, yeah, let somebody else do this headache, and you're the answer. So shout out your phone number if you would.
Yeah, so my phone number is 817-513-9993, and you can find me at Jason@freakyfasthomebuyers.com.
Okay, so Malibu Funding, the company that sponsors the show and the company that I work for, is in 10 different states over the East Coast, Midwest, and in the West Coast. So most of the properties you're talking about, probably for $75,000, you're not going to find anything in Southern California. Where are some of the areas that you are getting deals like that, and where are most of your properties located?
Yeah, so right now we invest in 2 states, Georgia and Ohio. Georgia is kind of our pilot or our main hub where we've been investing, and now we are moving into our second market, and hopefully by the end of the year we should be in our third market. So we are branching out pretty quickly, and you know, these type of investments are perfect opportunities for investors, especially out on the West Coast, because you know, for $150,000, $200,000, you can't even really buy a good rental property that's going to make double-digit returns out there. Like it's
500,000, you can't buy anything. That's
exactly.
The market's crazy out here.
And buy 3 to 4 houses in the South, in Georgia. You could do that in the Midwest, like Ohio, and so you get 3 to 4 properties for about $200,000 and generate cash flow every month. The reason why we do this game, Jeff, is for us to be able to provide ourselves financial freedom, and then also time-wise. And, you know, all I've heard my whole life is mailbox money. You know, you want cash flow and you want mailbox money. Well, this is the best way to do it, by buying properties that are cash flowing every month and generating income for you. And if you can do it without having to put a lot of effort and time into it, then you're even further ahead of the game than a lot of investors who are buying and managing and rehabbing all themselves.
Yeah, you know, Malibu's down in Georgia too. I have family down in Georgia, a lot of family down in Georgia, all over the South. There are many, many properties down there. The one thing I've heard from some investors is they want to be close to where their property. How do you answer them when they say you don't have to be in order to make this system work?
Why do you want to be close? You know, that's a question I always ask, is why do you want to be close? Oh, I want to see it. Why?
Right.
It's real, but if the closer you are, the more often you're going to get called with problems. You know, so, and then we're like, well, how do we know you're legit? It's like, okay, you're not wiring money to me via Western Union, and I'm not in the Bahamas. You know, like everything is through attorneys, and so when you buy these properties, like you don't even wire me the money, you wire it directly to the
title company or the attorney,
The attorneys close the property. So and then they're like, well, we, you know, want to learn how to rehab properties. Why? Like, people see it on HDTV and they think it's glamorous and they think it's fun. And until they get in there and they start losing money and they start wasting a lot of time, do they feel overwhelmed and like, okay, that wasn't such a great idea.
Right. Hey, Jason, we're up against the clock right now. I apologize. I want to have you back on the show. This is a great area for a lot of people, especially in Southern California, who now take money out of their house and just don't know how to make residual income. But thank you for coming on the show.
Yeah, absolutely. Thank you for having me.
And thank you very much. I'm Jeff Barton, your voice in the mortgage industry. That has been Jason Engelman from Freaky Fast Home Buyers and Rentals. We'll see you. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and thanks very much for tuning in. You know, we're on 5 different stations, 3 different states, stretching from Las Vegas down to Albuquerque, all through California. Really happy that we've had such great acceptance in those markets. We're still looking for some real quality guests to come on from the different markets. So if you have one, if you know of somebody that you think would be great for the show, having to do in real estate and mortgage, remember, this is a show about what goes on in your neighborhood. So we need to have people from your neighborhood in order to promote what we really want to do: inform, help, guide people. This is not a commercial. We are not rah-rahing us. We are trying to help you. And we are on any of the 8 major podcasts, whether it be Google, Apple Music Play, iHeartRadio, Spreaker, and there's several other. Daryl, you got the list there?
Yeah, we got Spotify, Stitcher, radio.com, and YouTube are the other
Okay,
ones.
excellent. And that's a good point. YouTube. This show, we show video as well as audio. And on YouTube, you can go to Jeff Barton, the Mortgage Voice, and see the show. You can see the guests. We put up a picture of the guests and their contact information, and it's there forever. We have hundreds of shows there, and certainly during the coronavirus and the coronavirus problem that we've been having nationally, we are trying to gear up a little bit more by presenting a daily 1 to 2 minutes on LinkedIn and Facebook, just to keep you informed and in the know as to what's happening in the real estate and in the mortgage world. Okay, we took a look, my staff and I, at some of the problems with home working. And I know that those of you who have gone home, about 35% of the national workforce is now working from home. That's a big number. We were at 7% prior to the pandemic, but now we're about 35%. So there's some problems working at home. And one of the problems, and this has nothing to do with you personally working at home and what your problems are, this has to do with the company that's hiring and paying you to stay home and knowing or not knowing what's going on. I know I experience it. I know that other business owners experience it. And usually out of sight, out of mind, yeah, that's a bad thing when it comes to watching productivity and how things progress, whether it's in your business or however it works out for you. So we looked at 5 different things in an article or 2 that if you get 3 of them, great, your productivity is above 90%. I'll list the 5 things here. Taking initiative. We all know what taking initiative means. It means without being told what to do and how to do it, you recognize a problem and you seek out solutions to solve it. That's a big thing in our business. I suppose it's a big thing in many businesses. I know that some businesses, lenders, real estate companies, they have a very tight and strong top-down management structure whereby they have identified areas that certain people have tremendous job restrictions. With a company like Malibu and a lot of mortgage brokers and mortgage lenders around the country, it's a much looser structure. Most of our employees, most of our 1099s, they're all working from home anyway. So you really don't know what they're doing other than in production and in the loan submissions and in the compliance aspect when it comes down to that. So taking initiative is extremely important. And if you've got that quality, that's a great thing for most employers. And anybody who's working from home needs to have that in terms of really producing for the company that's paying them. 2, consistently delivering results. That's extremely important. The consistency over time is what makes an employee great. I don't care if they're working from home, whether they're working from your office. If you can look at all the greatest athletes in the world. Look at all the greatest stock purchasers or the stock managers. Look at anybody in any field, musicians. Consistency over time. They say the 10,000 hour rule. That's very, very true. You need to be there, showing up, doing the thing you got to do every day. And that's what makes something great. And that's what your employer is looking for. Number 3, displays expertise and good judgment. Obviously, over time, you're going to get good at what you do. You just have to have a moral compass and a great ethic in order to make sound judgments. Everybody makes mistakes. I'd be wrong if I told you I didn't make mistakes. But over the years, what happens is your judgment gets better as long as you continue to work on your craft. Number 4, the role model. Walk the talk. That's extremely important. In our company, 22 years old right now, we've never bounced a check. That's important. Why is that important? Because it shows your level of commitment to the people that work for you. They're more important than you are. And if you're an employee at home, you need to consistently show by what you do, the commitment level you have to that company. And I don't care if you're planning to leave the company, but that's what the important aspect is of having the role model and walking the talk. And number 5, the willingness to stretch. Okay, can you take all of these things and say, what is the most important aspect to it? Once you get those first four, is the willingness to make a mistake and make a fool of yourself. I forget who said it, but the unapologetic willingness to say, you know what, let's do this. Quick story, everybody knows it, who's listened to the show over the last year. Malibu Funding was in software purchase. We purchased a whole new origination software, worked with it for 4.5 months. After working with it for 4.5 months and spending tens and thousands of dollars, the entire system just didn't work. Didn't work for my company, didn't work for the people that work for me. We threw it out the window. Now, that not only is an expensive mistake, but you look like a complete moron when you don't know if the software is going to work. We did it anyway. It tells your people that you can listen, you can admit a mistake, and you're not trying to shove your solutions down the throat of somebody else who has their own solutions. Those 5 things. Now, the survey said if you can get 3 of those things and do them really well, your productivity is over 90%. If you can obviously get more, your productivity is higher. The average productivity in any workplace is 79%. Working from home can actually be more productive. Now, in the loan business, we've had our best month in the history of the 22-year-old company in June this year. Rates, right? Obviously, everybody knows that. But it shows you also that motivated people working from home can be equally, if not more productive than people who work at the office. I'm Jeff Barton. I'm your voice for the mortgage industry. Thanks very much for listening. We'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.